the just a recap of the driver, all right, because it's important. Everybody should know, unless you're living under a rock, that North Korea is the reason for the gap lower open that we had, about a 17-18 handle break from the previous session's close. We opened up at 28 quarter in the S&Ps. We closed at 44 quarter yesterday. And here on Tuesday, if you're watching this meeting in the future, it's Tuesday, August 29th, and on the 28th, mid-afternoon Central Time, North Korea shot a missile over Japan. While that's going to be bearish, it would have been even probably more bearish, and we would have overreacted more had we been open midday. So the thing is, we climbed the ladder, opened up strong on a 12 PNF, and then just walked up the ladder, filled up the gap to yesterday's close, and then eventually got close on this drive higher right here to even yesterday's close. Now, it's bullish throughout the morning session. I didn't think it would be this bullish, though. I didn't think it would go all the way back up close to where we closed yesterday. Now, the key that I'm bringing this up is because you got to be aware of any subsequent tape bombs, as we call it, that will come down the wire addressing this story. If it's from Japan, if it's from our president, United Nations, from China, from North Korea again. Generally, it's going to be a chance of a more bearish comment that hits the tape than a bullish comment. The next bullish comment on this story would be after another bearish comment would come. If something bearish came out and then they unwound that, then we get the bounce. So just make sure there are no excuses for missing an opportunity to the downside if you're in front of your workstation that something came out that drove us 10 handles lower and you were either stuck long or couldn't get short, or were in a position where you didn't know why for too long a period. Then you're not a pro. You want to be a pro, you got to know what the hell's going on and put yourself in a position to capitalize, right? To capitalize. There's all kinds of caribou and deer, and you're hungry, and yet you didn't see them coming, or you weren't aware that they were there. You had a gun and everything else, and you're like, well, where did they come from? And you don't have your rifle. You've got to make sure you're prepared. Now, that came out, that story broke at about 4:15 Central Time yesterday. Markets were closed. We opened up, like I said, about 16 handles lower or something. Drove to like 20 even, 24, 21 even overnight session. We're 20 points above that right now. So after we opened at 28 quarter, we ran them up. I'm going to roll into this meeting as kind of part two. We're going to just keep stepping through the edge zones and just keep building on them. Last week, we just covered the basics, showed people that have market delta what some of the filters were, how to change them around. Today, we're going to talk about the multiple time frames. You might have seen this. You might have seen this image when you came into the meeting today, but that's what we're going to discuss. The edge zones, multiple time frames, or multiple anything. Multiple time frames or multiple anything. And I'll tell you what I mean by the multiple anything in a moment. But first, multiple time frames with these edge zones. I would hope people prepare, and I'll show you worksheets that I prepare over multiple time frames, and as you kind of drill down into better levels because of better visuals, it's easier to do your homework, prepare. And then when you're kind of organizing, and I don't like to use the word homework, but preparation is important. Homework to me is a negative word to use because who the hell likes to do homework? Use that word, I don't want to do homework. You're going to get used to not wanting to do it. But to be prepared is different. Homework is doing research. Being prepared is knowing what you're looking for and then getting ready to trade it or to adapt to it. So when you go to prepare, you're doing it with other people. They could share their levels, and you could kind of highlight what numbers keep coming up. You still got to know how to trade them, qualify them, and all of the other good stuff. But having your best levels, putting yourself in the best position to have the best levels, tweaking them and everything else is going to be first and foremost. And by the way, you don't have these levels or you don't have a platform that uses them. I mean, this isn't the end all, the best. I'm not a guy that's going to sit here and say these levels are better than any level you have. Who am I to say that? I'm not going to get into that discussion or argument. It's a waste of time. So multiple time frames. I want people to look at stuff from far back, what's comfortable to you, and drill it right into the real time. No matter your personal time frame, your average hold time, what your average risk or reward might be, and all that rest. You still want to look at multiple time frames and drill down into the now. The now is a 4 PNF. right? A smaller time frame P&F in your particular market. It might be a 6 in the NASDAQ. I like a 4 in the ES. So first you take a look at a daily chart. Then I drill down into this daily filter that I created with these because of the edge zones to also see what they're showing me. Then I get into an hourly or 60-minute footprint, 12 P&F, and then a 4. So I take myself from a high time frame into a slightly different daily time frame, 60, 12, 4. And I write these things down on a simple worksheet that I took an image of, and other notes that I might have for, on the other side of this was August 28th notes. This is the 29th. I always put a date somewhere on it. And here's daily with the filter, daily without the filter, 12, 4, 60-minute was over here. Over here I put North Korea because I knew that that was going to be something we were going to talk about. I put that on my worksheet. Edge zones, what are they, is just something that I write in preparing for the meetings. Over here, this is just a worksheet that I have some of the edge sessions that I'm looking to do, and that is, we talked about the layout last week. We're going to talk about the levels this week. In fact, we are now. We're going to talk about suggested uses and different setups for them maybe next week, and then a potluck where people are going to hopefully bring in some uses that they have for them and they're willing to share with the rest of the edge group. You're not sharing it with the masses, with the edge group. Whatever platform you use, whatever ways that you've tweaked and found to have really helpful uses at some point. Might not be in 2 weeks. It might be in 6 weeks. We might do it every so often. But that'll be interesting meetings to have, and that's what this is all about. Then I also put an economic calendar, some numbers that are going to come out and things like that. Now, when I put these levels across, I'll usually, and I didn't because a lot of them didn't, I had it on the other one. I'll circle the ones, what was yesterday? I'll circle the ones that keep coming up. And if you see 49, quarter, half, 49, 46 even to 49 even, these keep coming up, and I think they're going to be important. They have been important a lot as overhead resistance, and then once we get through, we're going to be real bullish in the S&Ps, right? Those levels keep coming up. Remember, we extended a lot to the downside because of this gap open lower. So if you run your worksheet straight across, and you could start to see these levels in a column, you could start to see the ones that might come up. It's going to help you say, hey, I like that. I like that level. Now let's actually look at these. With Market Delta, I like the tab feature. I could just tab through up near the top the different time frames. So if I start at a day footprint, that's filtered for just 189 bigger orders that come through. So it's essentially a daily look, a day chart look at the footprint of a filter. So it's taking, let me throw this down if you're used to looking at trading, it's taking this chart, which is bigger orders that come in, and just making a daily out of it. Okay? And what levels come across for it. And write them down. So this one so far has worked really well. Wherever it came from, came across. Daily low in here. Worked nice. Didn't close below it, so it stayed intact. Didn't work that well, but you got to remember why it would close and how often it worked, right? And so you write these levels down that are fresh. 34 even would be a level that it will be written down on my sheet for tomorrow. Then I move this tab over and go into the daily. These are just daily footprints. Each bar is a footprint on the whole day. Okay, you could see how well these worked as this day session's low. This one worked as this day session's low. This one worked as this day session low. How it continued to work as today's overnight low, and so on. Now, a rule of thumb: the higher the time frame with these edge zones, the lower the imbalance percentage. I'll say it again. The higher the time frame, the lower the imbalance percentage, but the higher the min diff. Let's go in and show you that. If you go in, these are the edge zones. You've got a threshold of only 200%, not the usual 5 to 600%. Then you go into the min diff, 2,500. That has to be higher. Higher min diff, lower threshold percentage for higher time frames. Why a higher min diff? Because there's a lot of volume that's going to be traded on a daily or a 60-minute chart. And if there's a ton of volume traded on it, chances are your min diff is too low. It's not going to qualify. Look at all the volume that's traded on every price level. Makes sense because it's calculating it for the entire session. So your min diff could be adjusted if you filter it down to just bigger orders. Then if you go into this, into the, well, I still have it at 1250. Again, go in, tweak it to see that you don't have too many levels or too few of levels. So as you go, move this down into filtered, unfiltered, 60-minute, right? I'm not really fond of the 60-minute. I'm still playing with it. A couple levels that came up in the overnight session, or not the overnight session, on a 60-minute. Remember, every one of these footprints is 60 minutes in time or hourly. 38.5, which, pretty much didn't come back. I don't think it came back down and used it as support, although it might have. I got to see. It might have been between 10:30 and 11. But you write down these levels. This is obviously all from the overnight session. And today, you go further back. Here's that gap open lower you would have seen in the overnight session. Here's a level at 47.75 that would have come across, that will come across, and that's pretty much anything on the upside. And so you write those in. Then you move down to a 12 PNF. 12 PNF to me is somewhere in between a 60-minute and a 4 PNF. You write down these levels. Obviously, all these levels in here are the ones that were thrown out today. But you could have these on the sheet. I think 29.25 would have been a 12 PNF. I don't think it actually was. It came up in the overnight. That's what it was. So you come in and you have this market show you what's going to happen on a 12 PNF. One of the things that when we came in today, this bar was, we were up here somewhere. Wait, these cursors going. We had this bar right here. We were up towards the top of this bar, 28.25 where we opened. So the 12 was beginning to show that the low might have been in, or at least the bulls on a 12 were in control. And there was nothing that happened on a 12 PNF that would have made you question that. They still stayed above halfway between this low down here and the high of this bar here on this retracement in there. So there's really nothing that happened on this 12 PNF up until right now that would have put this back into a bearish mode. So again, you can go in here and write down the levels, and some of you guys might already do this, and that's fine. And then write down your levels to what showed up on a 4 that come across in the morning. Now, for the most part, guys are doing this at night or in the morning. One other thing I wanted to show you is that if you're using these levels and you don't see a lot happen overnight, you're going to have to create an overnight chart. Volume is typically lighter in an overnight session. So you're going to want to create another tab and another chart to change your filters, and that's what I did in here. So you're going to see too many green bars because it's also showing you the day session. But when you go into an overnight session, like I'll draw back and show you, you're going to see bars that you otherwise wouldn't have seen because I adjusted the filter lower from the min diff in order to get some levels to show up. And you see levels that show up in here 2 o'clock in the morning on the 29th, and if I go to a 4 regular PNF on the 29th at that time in the morning, you see nothing show up. So it's not a bad idea to create an overnight chart. Just know that when you're looking at your overnight chart during the day session, you're going to get a lot of noise, meaning you're going to get a lot of these levels just keep coming up all over the place, and you're going to get confused. If you want to just write down the double stack, triple stack, conditions that come in, or instances that come in, double stack or triple stack imbalances, you could just, right now they don't have it written, they will soon, but they don't have it written where you could just filter out those instances of double or triple stacks. But then you could also put them on your worksheet. Having a worksheet isn't going to make you $1 million. It's just going to help you prepare to recognize a level than just having to see it. Now, someone could sit here and say, well, the visual's so great, well, I'm going to write it down for them. I'm just going to look for it. To me, and in my opinion, it's part of the process to write the damn things down. So it could click. Maybe you recognize something you would have missed, and it's good to discuss these levels with other people. And maybe save yourself some work. If you know someone's coming up with NASDAQ levels, like you come up with your ES levels, you guys could piggyback on each other's work and actually be able to get 2 markets done with half the effort. But no question, when the visuals are better, it's easier to write down these numbers in multiple markets. I'm trying to get it filtered where we're only going to see confluence correlation. So we could have a chart that just shows levels that would have been thrown in at the same time in 2 markets. That's the only ones that are going to appear. These would have been the only ones that appear down in here. This 4 quadruple stack came in when we ran up just before 10 o'clock this morning. All right. If you take a look at the NASDAQ during the same time, 10 o'clock this morning, they had a whole bunch of green that came in right there. So all those levels would maybe have been the only levels that appear in this sequence, and you could see how well they worked at support a few times. It didn't work that great in here, but it worked awesome in here. Sent it back up 7 or 8 points, chopped around these, and then ran. I don't expect people to prepare exactly the same as me, nor could you or should you expect me to prepare like you. Everyone's got their own idiosyncrasy that's going to help them prepare the best, but at least you're putting a little bit of time into writing down levels that matter. Even though I don't have to write down the economic numbers and where they're going to come out and everything because it's on a Bloomberg calendar that's open on another computer of mine, I still do it. There's some value in writing some things down, especially if you're not writing a book every time you have to write. You see how simple and easy a worksheet could be. I think everybody should have one. You're just going to feel more prepared, and you're going to continue to give yourself a better chance to do what you say. Because that's what it's all about. You got to know a little bit of what you're talking about in order to, when you do what you say, it'll work. Because if you don't know what the hell you're talking about, you could do what you say and still get destroyed because you don't know what the hell you're talking about or doing. It's just random. But that's actually better than knowing what you're doing and never doing what you say. But at least you're doing something. But if you have a grasp on markets, you have a grasp on levels, you have a grasp on qualification, you have a grasp on what most have a grasp on, then the toughest part and the big void is doing what you say. Sounds pretty easy, it's not. I want to play from the long side today. I did what I said. I didn't do as well as I wanted to do, but I did what I said. I wanted to play from the long side, not all day today, but after the open. I did feel that we're going to probably go up, and we were a little cheap based on that down move overnight. At least do what you say, and I think that's important. So then when I go to the back to this, the multi-anything, dancing around. It's like The Exorcist. Let me go back to when I said those guys. Multiple time frames, multiple anything. What does that mean? Just what it says. Multiple markets. Dig around, find out just one ancillary market. If the bonds are working really well opposite stocks, where are they in support when we're in resistance? Is there resistance across the NASDAQ and the ES? Came in at the same time. or they're coming into both resistance in the same area. Crude oil, something that's obviously highly correlated. Could be the DAX, could be an ancillary market, but that's what multi-anything means. Multiple time frames should be easy to understand, and you can walk through it pretty easily and efficiently now. And then multiple markets. Anything that you could find help in, multiple anything, it's useful. Taking any kind of confluence between some levels of filter gives you with the unfiltered. Being able to look at this in confluence with a delta chart. And I'm working on things not to overwhelm people and just walk people through things one thing at a time, but stacking delta charts up next to each other to give people a much better dimension of looking at profiles than just volume or market profile. There's nothing wrong with volume and TPO profiling, but you got to execute those damn things, and people get stuck really with them. If you're going to use them for levels and coming in and out of volume, great, but then don't miss the delta profile and how important we're getting multiple high reds and high greens on our imbalances over multiple time frames here. Look where it comes through between 43.75 and 42.50. And where do we come in today? Right into that area is good resistance eventually. We'll talk more and more about this chart and delta profiles, but to me, better dimension when looking and trying to profile something than volume and market profile. That doesn't mean it's the best, and it might not be better for you. I like it better. This market is still in and on its way up. That's all I got for this meeting. Keep it short. I want people, if they want to get back to trading, get back to trading. I try to run these meetings as if we're in a physical building together and we all come to the conference room. And if it's a busy day out there, we're not going to stay in the conference room for long. But I do want to kind of graduate this into some of my suggested uses, and then bringing people together as we move on with these edge zones to continue to collaborate how other people are finding them useful. It's the only and best way to get the most out of this kind of community. I'm going to stop the recording. I'll have it posted in a couple hours. Just don't forget, nothing in the 12 P&F has made us bearish today, number one. And number two, there's going to be a headline. I don't know when and I don't know what it's going to be exactly, but there's going to be a headline that's going to make us bearish. Maybe not even today. But North Korea, like I said last week, wasn't going away. Unfortunately, they did this the only hour we're not open, and certainly not in front of our workstations. But good luck, and make sure you're managing your damn risk before you take it. And really focus on this, and maybe write this down. Just do what you say. Don't do what I say. Do what you say. You say you want to do something, keep track of how often you do it. And you'll be surprised that it's not as often as you wished. We'll see you guys tomorrow or next week.